Ladies and gentlemen, good day and welcome to Deep Industries Limited Q3 and 9M FY26 conference call hosted by Systematix Institutional Equities. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sudeep Anand. Thank you, and over to you.
Thank you, Hina, and good morning, everyone. Thanks for joining us today for the Q3 and 9 months FY26 earnings call of Deep Industries. On behalf of Systematix, I would like to thank the management for giving us the opportunity to host the call, and also many congratulations for the great set of numbers. Today we have with us Mr. Paras Savla, Chairman and Managing Director, and Mr. Rohan Shah, Director of Finance and CFO. Now, I would like to hand over the call to the management for the opening remarks, and then we can open the call for a Q&A. Thank you, and over to you, Paras.
Thank you. Good morning, everyone, and thank you all for joining us today to discuss our performance for the third quarter and 9 months ended 31st December 2025. We sincerely appreciate your continued interest and confidence in Deep Industries. I trust you have had the chance and the opportunity to review our financial results, press release, and investor presentation, which have been made available on the company's website and stock exchanges. I am joined today by our Director of Finance and CFO, Mr. Rohan Shah, who will take you through the financial performance for the quarter and 9 months in detail after my remarks. Let me briefly take you through India's macroeconomic environment and the evolving dynamics of the energy sector. India's energy sector is currently witnessing one of its strongest multi-year investment cycles. The policy focus has decisively shifted from energy security to energy independence, with a clear roadmap to mobilize over $100 billion of investments in oil and gas by 2030, and a broader opportunity of over $500 billion across the energy value chain. This includes accelerated domestic exploration, expansion of gas and LNG infrastructure, high refining capacity, and deeper integration across upstream and downstream segments. India's natural gas consumption is projected to grow by nearly 60% by 2030, rising from 188 MMSCMD in FY24 to around 297 MMSCMD under the good-to-go scenario. In this constructive and fast-moving industry environment, our focus is not on chasing activity, but on disciplined execution, asset reliability, and capital efficiency at the project level areas where our operating experience and integrated capabilities provide a clear advantage. Now I'll speak about the operational performance highlights. During Q3 FY26, Deep Industries continued to deliver consistent operational performance with a sharp focus on safety, execution discipline, and asset reliability across all operating sites. Our production enhancement operations at Rajamundry field progressed as planned during the quarter. During operations, there was a gas leakage incident which was encountered at the site. This was an unexpected geological surprise encountered during operations through a swift response, strong safety systems, and close coordination with ONGC and the regulatory authorities. The situation was successfully contained within 5 days, which is a rare outcome in such cases. And notingly, we didn't have any casualty. About the business momentum and order book. Across our core service offerings, onshore drilling, workover services, gas processing, and production enhancement asset utilization remained healthy during the quarter. Continued policy thrust on expanding exploration acreage, strengthening gas infrastructure, and enhancing domestic production capabilities is supporting sustained demand for integrated oilfield services. Our order book remains robust, providing multi-year revenue visibility and reinforcing confidence in our long-term growth outlook. On the strategic priorities, as we move through the remainder of FY26, our strategic priorities remain centered on maintaining the highest standards of safety and operational excellence, optimizing asset utilization and execution efficiency, thereby strengthening cash flow discipline and balance sheet quality, and participating selectively in value-accretive domestic and international opportunities that are aligned with India's expanding energy ecosystem. We believe this balanced approach positions us well to navigate operating complexities while continuing to create long-term value. In closing, I would like to thank our employees for their dedication and professionalism, our clients for their continued trust, and our partners for their collaboration. We also thank our investors for their ongoing support and confidence in Deep Industries. With that, I now invite Rohan to take you through the financial highlights for quarter 3 and 9 months FY26. Thank you.
Thank you, Parasbhai. Investor friends, thank you for joining the call today. I am pleased to share with you another strong quarterly and 9 months performance of Deep Industries Limited. All comparisons are on a year-on-year basis, which would provide a fair evaluation. I will start with quarter first. For third quarter ended 31st December 25, revenue stood at 221.5 crore, up by 43.1% year-on-year. Tight control over operating costs helped us post EBITDA of rupees 110.1 crore in Q3 FY26, reflecting 46.3% YOY growth with an EBITDA margin of 47.6%. We continued to maintain healthy EBITDA margins in the range of 46 to 48%, ensuring strong operating cash generation to support our future growth trajectory. Net profit for the quarter was rupees 71.3 crore, up by 49.8% year-on-year. For 9 months ended on 31st December, revenue from operations stood at rupees 642 crore, registering 57% year-on-year growth. EBITDA for 9 months FY26 was rupees 318 crore, up by 58% year-on-year, with an average EBITDA margin of 46.3%. Profit after tax for 9 months FY26 was rupees 204.3 crore, showing 59.7% year-on-year growth. As on date, our order book stood at rupees 2,967 crore, providing strong revenue visibility for the coming quarters. With this, I now open the forum for question and answer. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 in their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, the first question comes from the line of Parth Agarwal from Bastion Research. Please go ahead.
Hi, thank you for the opportunity. So I have 2 questions. One is around order book. So, for the last few quarters, our order book has plateaued around, 3,000 crores. And our major client ONGC has announced, major capex for FY27. So when can we expect, new series of order coming from those clients?
So, regular tenders are being floated by various oil and gas producers, including ONGC. And we are regularly bidding those tenders related to our part of services. And I think for us, bidding tenders and getting orders on regular basis is consistent over quarters. So, yeah, it would be continuous flow for us.
Okay. So currently, what is the amount of order that we bid for so far right now, which is outstanding and the allotment is pending?
So our current bidding pipeline is somewhere around 800 crores tentatively, but since those are bids, amount may vary.
Okay. And so generally, a success rate is around 20-30%?
Yeah, it is. In some of verticals, it is more than 50% as well.
Got it. Second is on the, PEC project that you're doing for the ONGC. So are we producing above the baseline right now?
Yes. So in PEC, it is progressing well as per our expectation.
Got it. And out in this quarter, how much percentage of revenue is coming from PEC, if you can see that?
So PEC we have started recently, so it would not be measured in percentage, yeah, though it is not much contribution from PEC this quarter, but in coming quarters it will come up well.
So if you're producing above baseline, then my expectation is that we're getting a good revenue share, right? Then in that case, it should be contributing decently.
Yeah, but see, what additional you are generating over and above baseline is also material while calculating the revenue contribution. So we are seeing this in this quarter, contribution from PEC was somewhere around 20 CR, which eventually would be ramping up over a period of time.
Got it. So at some point it would reach around 100 crores per quarter kind of number, or difficult to achieve that?
So our expectation from this particular project is around 150 crore on a year basis.
150 on a year basis. Got it. Okay. Thank you so much.
Thank you.
Thank you. The next question comes from the line of Rohit Priyadarshi from Mittal Analytics Private Limited. Please go ahead.
Yeah, hi. Thanks for the opportunity, sir, and congratulations on the good set of numbers. Sir, I wanted to understand more on the macro environment front on the offshore drilling market. So is there any slowdown in offshore activity, or do you still see strong demand?
I think overall oil and gas industry is witnessing a good growth. Particularly our interests are more into onshore activities, and therefore we have an understanding that the demand is increasing in onshore activities. With regards to offshore, there is a traction, but we won't be able to comment exactly how offshore have been.
Okay. And sir, can you please also comment on the drilling and related services like demand related to vessels that we use in offshore activities?
Sorry, I didn't get your question. Can you please repeat that?
Yeah. So I was asking about the vessels that are required. So what kind of demands are you are seeing related to the vessels?
See, primarily we are looking towards the vessels which are more or less support which are involved in support services like our barge or anchor handling tugs or diving support vessel kind of. So on those areas, we are witnessing a good amount of demand, and that demand is prevailing, I think, around the globe. So there is a good opportunity going forward.
Okay. And sir, in our Q3 revenues, we grew up to 222 crores, which is growth of 40% year on year. So I wanted to understand which segment contributed most to this growth, like onshore rigs, PEC, or gas compression, if you can quantify the segment.
So growth is almost in each segment. So as I said, production enhancement is something which is new, which has started contributing. And with regards to offshore services, they have also started contributing in full during the quarter. So, and of course, by deploying new rigs and assets in other verticals also, we are seeing good amount of growth. So, I would say we are exactly going on as per our expectation, and this growth is very much visible.
And sir, is this growth more of volume driven, or there is some pricing or day rate improvement also happened?
More of volume.
Achha, volume driven. Okay. And sir, last question would be on the offshore business, which is our Dolphin and Prabha
Mr.
DP2
Rohit,
barge.
Mr. Rohit,
Yeah.
you may rejoin the queue for the follow-up question.
Sure.
Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit yourselves to 2 questions. The next question comes from the line of Manan Shah from Moneybee Investment Advisor. Please go ahead.
Yes, hi. Thank you for the opportunity. First of all, I would like to congratulate the entire team and the management for consistently delivering since past 3 years. So very rare to find this sort of execution over this sort of time frame. So congratulations for that. My first question was on this production enhancement scheme. You mentioned that you expect to ramp up to say 150 crore sort of output. So you are expecting this ramp up to happen in the next year itself, or it should be a gradual ramp up over the next 2-3 years? And also the incident which occurred, I believe, was at this particular site only. So will that lead to any sort of delay in the ramp up?
Thank you, Manan bhai. Yes, so this 150 crore revenue we are expecting from next financial year onwards. So maybe not full next financial year, but on full year basis, probably 27-28 we can reach over and above 150 crore. To answer to your second question about that incident, yes, that was an unfortunate incident happened in production enhancement contract itself. But as said by Paras bhai, we have contained that in just record time of 5 days and have avoided any losses pertaining to that. So I would say there would be little delay in the revenue ramp up because of this, maybe around 2-3 months delay in ramp up of revenue. Other than that, we are not foreseeing any negative out of this.
Understood. My second question was on the Dolphin side. In the current quarter, we have booked some expenses, or there is some increase in the raw material consumption. Our understanding was that the price that we have negotiated is post all expenses. So if you can just tell us what this increase in expenses in Dolphin has been.
Right. So there were certain amount of repairing were required as per client's additional requirement in the barge. And since that asset is up and running, the expenses which we had incurred had posted into the operating expense. That is how in this quarter it is appearing little high.
So this is a one-off. It is not expected to continue in the subsequent quarters.
Mostly no. Yeah. Repairing you cannot comment upon or expect, but yeah, you can say like that.
Okay, understood. Thirdly, on the order book side, generally every quarter, since the past few quarters, we have been winning orders close to 200 to 300 crores. While this quarter overall order wins have been close to just 140 crores. So has there been a rollover to the subsequent quarter, and should we expect, subsequent order wins or conclusion of these tenders that we have bid for in the Q4?
Yes. So we are expecting good amount of conversion in Q4 based on tenders bidded, and in 1 or 2 we are L1 as well. So yes, I can say the order win for this particular quarter was not as high as it was in earlier quarters, but that can spill over in Q4. Yeah.
Mr. Manan, you may rejoin the queue for the follow-up question.
Sure.
The next question comes from the line of Sanjay Shah from KSA Securities. Please go ahead.
Yeah, good morning, gentlemen. Thanks for the opportunity, and your detailed presentation is really helpful. So my question was regarding, given our PSU exposure, how comfortable are you with the receivable cycle, and are there any structural improvement in the payment timelines? And the continuing to that, ONGC and GAIL are our key clients. How are you thinking about diversifying client exposure without compromising on margins?
See, having said that, PSUs do definitely have the largest market share in India, and therefore it's not possible to completely get out of that PSU culture, or to an extent, of course, we are trying to get to the private clients and which we have, other than ONGC and GAIL. So we have our clients with Oil India, we have clients with GSPC, LNG, Vedanta, Telan. So likewise, we are working almost with all the leading oil and gas producers. But having said that, the kind of market share and the demand that is being generated from these one or two companies cannot be avoided. We have our exposures also with other clients, and there we are constantly working on expanding our client base, which I'm very sure maybe in some short span of time could be witnessed. But it won't be very immediate. And regard to comfort, we have been working with these clients now over 30 years. So we have a reasonable experience working with these clients and understanding the culture. So, and with that, we don't find any difficulty working with these clients.
So my second question was regarding new opportunities. What are the new opportunities what we see for our company, and what are the steps taken by the management to go ahead with that?
With regards to the new opportunity, we are constantly thriving, as we had said, that we are working in 4 different verticals of our business, and each of the verticals have proved a fabulous outcome on each of these. So our idea is to expand our services into each of these verticals, each of the capacities, because with the process plant, we are running 2 process plants. Our idea is to work on more of these such opportunities which can help us expand not only the revenues but also expand our profits. Likewise, we are also looking into get into an higher capacity rigs, which are the need of India today. So we are actively working on those opportunities to get in that segment. So we believe for at least few years for now, we have got our hands full, and with the new requirements that are generated in the market or from the clients, would definitely take care of what all that you mentioned. And what was the other thing that you mentioned? Sorry,
Yeah, it was regarding the same new opportunities and how you see that scaling from management bandwidth and required fund for that.
And, there are all possibilities that new PEC should also come up. I think our clients would be firming up the requirements, because this probably should have worked very good for the companies as well. So we see a good amount of growth if it has to come also from PEC.
Mr. Sanjay, you may rejoin the queue for the follow-up question.
Sure.
The next question comes from the line of Khan Bhargava, an individual investor. Please go ahead.
Hello.
Yes.
Hello.
Bhargava,
Am I audible?
Yes, sir, you are.
Yeah. Hi. So I just have one question regarding your Kandla Energy acquisition. Sorry if you've addressed this before, but I need a little bit more clarification on this. So you had a 250 odd crore write-off last year in the fourth quarter, and in the Kandla annual report balance sheet, you still have about 208 odd crores of doubtful receivables. So can we expect another write-off coming from this?
So we are giving our attempts for recovery of those old receivables, and once we would be having a clear and fair idea about what amount to be recovered and what we will not be able to recover, we may go for some provisioning. But we are not expecting any such provisioning in this financial year.
And also, having said that, we'd like to reiterate that we have not paid any amount towards these outstanding. So this was a part and parcel of the the company that we got in. So this is an additional effort that we are trying to see to maximize whatever recovery that we can make.
Right. So, if I'm not mistaken, you acquired it from the ITC for about 1 lakh rupees, right?
No. For 2 crores, around 2 crores.
Oh, sorry, my bad. My understanding is wrong. So, you've acquired it for 2 crores and you've already done a write-off of about 250 crores and potentially another 200 crores का write-off होता है. So, what was the reason behind acquiring a company which is potentially causing you to write off close to 450 odd crores, which is more than 2 years of your earnings, if I take the last 2 years?
Yeah, so our interest in acquiring this particular company was largely the hydrocarbon fluids which they used to manufacture in their good times. So those hydrocarbon fluids we are using in our drilling processes, and that can be our, I would say, one of the major inputs while drilling wells. And with this, we can achieve some amount of backward integration. So that was our prime intention to acquire this company. Also, it was available at very reasonable price, along with some real estate properties. So that was a primary intention to acquire.
Mr. Karan, you may rejoin the queue for the follow-up question. The next question comes from the line of Deepak from IGE India. Please go ahead.
Hello, am I audible?
Yes, you are.
Yeah, sir. So we have a muted growth on QOQ despite we have a PEC contract revenue this quarter. So which segment or which product of ours has given the lesser growth this quarter, QOQ basis? And also if you can provide us the guidance on the revenue for next year and what's the status on the QIP?
So Q on Q, there can be some projects maybe spilling over to next contract, and there can be 1 or 2 contracts or assets which may be in transit from one contract to another. So there can be reasons during this quarter. So generally, we advise our investors to review our performance on yearly basis rather than quarterly basis, because these are all long-term contracts. And in second quarter, contribution from PEC is also not that significant. So more or less, results are in line.
Okay. And sir, revenue guidance and any status on QIP?
Based on our existing order book, we are pretty confident that for next year also we would be having growth of more than 30-35%. And the similar growth we can expect next to next year as well, depending on the new orders which we are getting on regular basis.
Mr.
With regards
Deepak,
to QIP, we have just paused that process as of now, and we are not going ahead with it.
Okay. Thank you. Thank you.
The next question comes from the line of Gaurav Sachdev from Sajak Securities. Please go ahead.
Hello, sir. Sir, first off, articles that the PEC fire incident, the well has been permanently capped. What is the status as of now? Has it been permanently capped?
No. It is not permanently capped. It is capped temporarily. And once we have our rig that is expected to come within 3 months, So once we have that rig going, we will try to recover that well and try to produce from that.
But you will only, I mean, it's not mandatory. You will only try to recover it.
Of course, we'll try to recover it.
Okay. And can you tell the total financial loss in this incident? Because I think as per the sources, one rig has been destroyed in this.
The rig has been destroyed. Certain portions of rigs have been destroyed. And we have the necessary insurance for ensuring that our losses are recovered. But we don't find major, losses towards any other thing. There would be few amounts that we are not still aware about because that assessment is still going on. But we don't feel that it should be significant.
But who will be funding these losses?
We have covered very well. We have covered very well, not only on the rig side, but also on the well side.
But sir, as per the news, ONGC has declared 10,000 ex gratia to the nearly 5,000 families and a 100-bed hospital. Who will be funding these things?
The ex gratia has nothing to do. When you are itself telling ex gratia, it is out of something responsibilities or whatever that ONGC is already operating in that area for years together, and they have definitely a larger infrastructure. And ONGC being the largest PSU, they have been doing the CSR activities for years together. So this incident of giving an amount on ex gratia, I don't think it is contractually, there is any liability towards us. So that is something that ONGC would have done it, but it does not have any implication as we speak on us.
Okay, thank you. Thank you.
Thank you.
The next question comes from the line of Ankur Savaria, an individual investor. Please go ahead.
Thanks a lot for giving me the opportunity, and I really congratulate the management for giving a stellar performance quarter after quarter. And I also think that I also agree with you, sir, that you have postponed the QIP because for last 1.5 years you have given excellent results, and the share price hasn't shown in the prices that it should have shown. My question regarding is that as of now, what is the status of the court case that we are ongoing with ONGC in the Supreme Court, sir?
Sorry, can you please speak a little loud, and can you please talk? Yes, are you referring to?
The court case that you have, sir, in the Supreme Court regarding the 180 crores that you feel that you will get.
So we have already got a good amount already from the same, and the matter has been contested by our client, and it is currently not in Supreme Court. It is lying with High Court. So as we mentioned that we have already won this case at the arbitration level, then we have already won it at a commercial court level, and now the matter is with the High Court. We don't know, we cannot time exactly when these court orders are going to come or what, but best we anticipate that it should be in next 3 to 6 months.
Okay. And sir, this year I think we will do a revenue of about 850 crores. Are you confident that a 30% jump, that is somewhere about 1150 is possible for next year?
Sorry, sir, your voice is not getting clear. If you can speak little louder or can take the handphone.
Sir, is it clear now?
Yeah, now it's better.
Okay. Sir, are you confident that the revenue this year, I think we will somewhere close around 850 crores. The revenue will grow to 1150 crores next year. Are you confident about that, sir?
Yeah, based on our existing order book, we are quite confident on that.
Okay. Thanks a lot for answering my questions, and all the best, sir.
Thank you.
The next question comes from the line of Rohit Priyadarshi from Mittal Analytics Private Limited. Please go ahead.
Thanks for the opportunity. Sir, the question is related to the Dolphin or Pravha DP2 barge. So what was the approximate revenue and EBITDA contribution from, in quarter three from these?
So I think Dolphin's results are also in public, so it would be clearly evident from that. Currently, I'll just tell you what exact contribution is coming from Dolphin. It has contributed around 30 crore on revenue and almost 13.5 crore on profitability by Dolphin for the quarter.
Okay. And sir, from the Prabha DP2 barge that we have, can you tell me the approximate revenue and EBITDA from that also?
Sorry, Prabha DP2 barge?
The revenue that we are generating from Prabha DP2 barge.
Yes. How much, sorry?
Sir, I want
So
to
we are
know,
expecting around 100 crore from that particular asset in current financial year as revenue.
Okay, understood. And sir, on the utilization level, are we fully utilized here?
Yes. So currently we are operating that single asset and it is 100% utilized.
Okay. Got it, sir. Thank you so much, sir. That is all from my side. Thank you.
Thank you. The next question comes from the line of Manan Shah from Moneybee Investment Advisor. Please go ahead.
Yeah, hi. Thanks for the follow-up. My question was on Kandla. So now it's been almost 9-10 months since we acquired that asset. When are we looking to see that asset commercialize and start contributing? Because I believe it was supposed to lead to some sort of margin expansion for you as well.
Correct. So as per original plan, it should start contributing from FY27. So we are working towards it. So in this particular financial year, we are not expecting anything out of that.
Okay, but in the next financial year, is it in the first half or the second half that you're targeting?
We are targeting second half.
And would it require any sort of capex?
Yes, it would, but not major one.
Okay. Secondly, on the bid that we have, bid pipeline of 800 crores, does this also have any sort of bid that we've bid which would require us to acquire any asset on the offshore side? Like I believe we were looking to add more vessels in the offshore segment, either tugs or platform support vessels. So is the current bid pipeline inclusive of that?
No, the 800 crore does not include the offshore bids.
Is there any separate bid pipeline for that?
Mr. Manan, you may rejoin the queue for the follow-up question.
So for offshore, as of now, we are on evaluation stage. So bidding is not yet done.
The next question comes from the line of Divakar Rana from Prudent Equity. Please go ahead.
Hello. So my question is a micro one. So can you explain how does the lower crude oil prices impact our business?
So in our business, entire revenue is coming from services, which are more of support services to oil and gas sector. And these services are more of inevitable in kind of nature. And so it has very negligible, or I would say least impact on crude oil price, because whatever crude oil price would be, these services would be required.
Okay. So just two more questions. Sir, after this Venezuela episode, US is going to increase the production of Venezuela oil. So do you think you can capitalize any opportunity there in terms of barge or any other products you have?
So yeah, there can be opportunity. So it is just a recent development. So it would be difficult to comment upon. But yeah, since we have also entered into offshore support services, we can have opportunities in those regions as well. And as a matter of fact, even our government and our Honorable Prime Minister is having a drive or a thrust to produce more oil and gas within the country. So I think with that kind of
things that are moving in the country, that will also give a big amount of boost to our segment within India. So we are equally excited to look the opportunities in India as well as any other countries possible.
Okay. And sir, one last question. So you said, you are not going ahead with the QIP. So does this impact our future growth and CapEx plan?
Not really, because we are generating some handsome cash from business, and we are very much comfortable on our debt levels as well. So we have a huge opportunity to raise debt as well as and when required. So largely we'll be able to manage without QIP.
Okay. Thank you, sir.
Thank you. The next question comes from the line of Abhisha from Siddhi Technologies. Please go ahead.
Hi. So I have one question regarding the onshore vessels that were going to be inbound from China. So what's the status? It was going to be deployed in December, and one of the vessels or rigs, I would say, were going to be deployed in Q4. So can you just elaborate the status? What is the status of both the rigs?
So the rigs, it was rigs, not the vessel, and rigs which we were intending to deploy in December have already been deployed, and the rig which we are expecting in Q4 would be deployed somewhere in first week of March.
Okay. And what the revenue can we expect from both of those rigs? Any status upon that, if we can?
Those numbers I need to check, but definitely it will contribute to incremental revenue for Q4.
Okay. Yeah. Thank you.
Thank you.
Thank you. The next question comes from the line of Gaurav Surde from Sajak Securities. Please go ahead.
Sir, just a follow-up question. Since you told that it will take around 3 months for the rig to come and there is no confirmation when the well will be capped off and services will be resumed in the PEC contract, so will it affect our Q4 revenue and further quarter revenue and margins also?
So as I mentioned, it will take us a quarter or so to bring the new rig. But having said that, there would be definitely a little impact on it. But today with the PEC contract, we are working on 40 different wells. So the one that the incident has taken place was one of them. Of course, that was a substantial of it. But having said, we have other 39 wells with us, and we are flowing a lot of gas from many other wells. So there could be a little impact on the incremental gas that we were to produce from this well. But barring that, everything is under control.
Okay. And sir, the order we got from GAIL, is it a renewed contract or a totally new contract?
It's a new contract. The one that you're talking about, the one that we had given out to the exchanges, right? Are you talking of the same?
Yes. Competition.
It's a new order.
Okay. Thank you, sir. That's all, sir.
Thank you. The next question comes from the line of Shekhar, an individual investor. Please go ahead.
Yeah. Thank you for the opportunity, sir. It's a little bit macro side. So we have this carbon capture utilization and storage scheme, which has got 20,000 crore of funding. If we look at the mechanism over there, carbon capture is not in our expertise, but compressing the carbon atom or transporting it or injecting it into the mature wells for enhanced oil recovery or to storage it. We are actually having too much of technological overlap, sir. So are we looking into this kind of a segment like the CCUS, which is right now in a pilot stage, but can we expect it to be a very major growth vertical, just like how SLB and Halliburton are currently doing for many people? And the second one, one is this to reduce the terminal value for our oil and gas business. One is CCUS, and the other two are compressed biogas and hydrogen. For compressed biogas, we have this 5% mandate, which is actually mandatory from FY2028-29. So how are we seeing this? Because even in compressed biogas, we have to seeing this compression and dehydration as a service. But the total addressable market size for compressed biogas doesn't seem that huge. But for this PCUS, it looks so huge now, sir, because out of the total 100%, around 20 to 30% goes to the storage and processing waste. So are we looking at this particular thing as a something which can reduce our terminal value, sir?
So I'll just try to answer both of your questions in one answer. See, the markets with oil and gas, like any other markets, are evolving. There are a lot of technological changes are happening, a lot of new products, new lines of businesses are evolving around the main line of business. So currently we are evaluating many opportunities, the one that you mentioned about the carbon capture, the one that you mentioned about biogas and all. So we are actively looking into each of these segments and we are trying to align with our main line of business. As we speak today, nothing of it is firm, but we are actively looking out at every of these opportunity, and upon an appropriate time, we will definitely try to get into such business where we feel that it could be a good equation and with the kind of business philosophy that we have at Deep Industry.
That's great. And the second one is...
Thank you. Mr. Shekhar, you may rejoin the queue for the follow-up questions. The next question comes from the line of Pankaj Motwani from Equirus Capital. Please go ahead.
Yes, thank you for the opportunity. So I have one question on line of the capex spend. So earlier we have capex spends for the PEC of around 160 crores and some capex for the rig and gas processing also, and also some acquisitions planned in the Dolphin. So now with the QRP now paused. So now how does the company plan to fund this capex and initiatives?
So the regular capex of gas processing plants and rigs, we are being funded through internal accruals and loans. So as I said earlier, we have a very low debt on our books, and we are pretty comfortable to increase it to certain level. So largely routine capex would be funded from internal accruals and debt. With regards to PEC capex also, we would be funding it through accruals and debt only. With regards with regards to acquisition of targets, it can differ a bit or maybe in next year.
Okay, so like we are waiting for the QIP, or like we will take debt for those acquisitions?
As of now, we are not going ahead with it, but in future, at opportune time, we may think, but as of now, no.
Got it. And just one more clarification. So like, just want to know like where is the Prabha barge currently deployed? Because as per my sources, it got shifted from Mexico to Africa. So any reason for the change in deployment?
Yeah, so Prabha is currently deployed in African waters.
Any reason for change in deployment?
Sorry, I didn't get your question.
I just want to know like so earlier it was in Mexico and now it has been shifted to Africa. So any reason for change?
It can be floated from region to region, right?
Okay, got it. Thank you.
Thank you. The next question comes from the line of Kapil Kumar, an individual investor. Please go ahead.
Yeah, hi. I joined the call a bit late, not sure if this already discussed. Regarding the fire in the Andhra well a while back, just wanted to understand, is there a penalty clause in the contract with ONGC? If yes, why hasn't been any provision made in this quarterly result? Second related question is, with the loss of the product there, the gas, while we were expected to maintain some baseline production, that might get affected. So how will ONGC be compensated for that loss of product in the well?
So we do not have any such provisions in the contract for claiming any loss or penalty, but but if you don't produce, the gas in itself is a penalty to you, because if you're not producing, you're not reaching the minimum threshold, and therefore that is in itself a penalty. So there is nothing as an external penalty, but our thrust is to bring back the well and the production in place very soon, and once we are out, we'll again resume where we were.
Okay. How much of the PEC contract value got affected because of that fire? Let's say that accounted for 2%, 5%, 10% of overall expected volumes.
So it has been deferred, I would say, because we will not be able to produce from that particular well at least for 2-3 months. So the incremental revenue is deferred now for 2-3 months.
Okay. And it doesn't bar us from any future ONGC contracts, the accident, that event that happened there?
No, nothing of that. That is has got nothing to do accidents. I not say that it's very common, but this is part and parcel of oil and gas business. So even this such kind of incidents happen with other contractors or with ONGC themselves. That is not something that because of this you have any penal actions and all. This is something that is a part and parcel of an oil and gas industry.
Okay, sure. Thank you so much for answering my questions.
Thank you.
Thank you. The next question comes from the line of Shekhar, an individual investor. Please go ahead.
Thank you for the follow-up, sir. Sir, it's regarding HF Hunter, the other vessel under Dolphin Offshore. It has been relocated from Mexico to Argentina. So are we getting any premium day rates, sir, because it's harsh environment in Argentina?
Sorry, if you can repeat your question. I am not getting it clear.
It's regarding the other vessels, sir. In Dolphin Offshore, we have other vessel, which is HF Hunter under JV, right? So it has been moved from Mexico to Argentina. So Argentinian waters are very harsh, sir. So are we getting any premium day rates?
So they are in line with what we were earlier used to get.
Okay, great. And the other one is regarding, this India-US trade deal. They are saying that the custom duty on the industrial goods imported from America, we are going to waive it off. So we are actually importing a lot of compressors and stuff from America. So is it going to positively impact us because the cost is going to reduce because of this trade deal?
Yes, definitely. Though we can get the duty credit, but if duties would be reduced, it will definitely help us reducing our capex.
That's great. And the other one is regarding the acquisition of vessels. So how many more months are we expecting to finalize a contract and buy out a vessel under Dolphin?
So we are actively evaluating, but we would follow the policy which we otherwise follow in Deep is we acquire asset or we do capex only on getting firm order. So once we have order in place, then only we can go ahead and buy the asset. So I think that policy we will follow in Dolphin as well.
Okay. Thank you, sir. That's it from my side.
Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Mr. Rohan Shah for closing remarks.
Thank you everyone for joining this call. It was pleasure interaction with you all. If you have any further queries, you can definitely approach us. We would happy to answer all your queries, and we thank you Systematics for organizing this call. Thank you.
On behalf of Systematics Institutional Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.